Are the days of regulatory turf wars in the American crypto landscape finally coming to an end? After years of headline-making clashes, the leaders of the U.S. Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, are now singing a song of collaboration, and that could reshape how digital assets and financial innovations are overseen in the country. But here's where it gets controversial. Does unity mean progress or just more bureaucracy? On Friday, SEC Chair Paul Atkins and Acting CFTC Chair Caroline Pham joined forces in a public call to unveil their plan for closer cooperation. Their next big move? Hosting a joint roundtable later this month, which promises a deep dive into hot-button issues such as prediction markets, decentralized finance, DeFi, and the transition toward 24/7 trading, not just for crypto, but across traditional financial markets as well. The agencies even published a statement committing to greater harmonization between their operations, a move aimed at making U.S. capital markets more hospitable for both established firms and innovative crypto startups. It's time to put aside our differences and work together, Atkins declared during the press event, signaling a big shift from the headline-grabbing disputes of the past. Previously, the SEC and CFTC sometimes clashed over which regulator should take responsibility for digital assets. Notably, under former President Biden, both agencies were run by Democrats, yet discord was common. Gary Gensler, the former SEC chief, was seen as a tough crypto skeptic, blocking comprehensive crypto rules and regularly taking firms to court. Meanwhile, then CFTC Chairman Rostin Benham was viewed as a touch more open to industry dialogue, highlighting the divisions that stalled coherent U.S. policy. A particularly thorny issue has been deciding whether specific crypto tokens, like Ethereum's ETH, fall under securities regulation, SEC, or commodities oversight, CFTC. Both agencies at times appeared to claim ETH as their domain, sowing confusion within the sector. And this is the part most people miss. Without regulatory clarity, many innovators chose to relocate overseas, escaping what they saw as a hostile U.S. environment. Now, both Atkins and Pham say the tide is turning. Their goal is to make America a more attractive base for financial and crypto innovators, laying the groundwork to supervise modern, round-the-clock markets. When quizzed by reporters about whether their agencies actually have enough resources to monitor 24/7 trading, a pressing concern with the rapid pace of crypto, Atkins said much of the responsibility would land on self-regulatory organizations, SROs. These industry-run groups are already tasked with overseeing trading on their own platforms. But Atkins suggested that Congress may need to establish a dedicated SRO just for the crypto sector in upcoming legislative reforms. Pham added that, thanks to consolidating tasks within her agency, the CFTC feels confident it can fulfill its mandate without hiring more staff. By centralizing our activities, we've been able to maximize our productivity and capacity. We're keeping up with all our initiatives and are excited to continue collaborating with the SEC, she said. But here's the real debate. Will such cooperation finally provide clear guidance for the industry, or could it just add new layers of complexity? With the Senate currently reviewing new crypto legislation that could overhaul market regulations, the question remains, will American policy finally lead the world or keep playing catch-up? What do you think? Is this newfound unity between the SEC and CFTC a real solution to crypto regulation or just bureaucratic window dressing? Should there be a single authority overseeing all digital asset markets, or does the dual approach work? Share your opinions and spark a discussion in the comments. Your voice could help shape the future of finance.